Chairman Sir, Gyan Mishra ji has joined this webinar. May we request Gyan Sir to please give his opening address at this webinar. Over to you, sir.
So thank you, Rita Madam, very respected Secretary of the Committee. Good afternoon, one and all participants, and of course, very learned and very necessary speaker of today's session, Vikram ji, moderator of the today's program, C. Sakuja ji, and very dedicated secretary for the Committee on Insolvency and Bankruptcy Code, Madam Yes ji, and very respected participants. Good afternoon, one and all. Friends, we all know that the Committee on Insolvency and Bankruptcy is providing this webinar on each and every Wednesday on the concurrent topics. This topic what we are going to discuss, that is voluntary liquidation and wonderful deliberation to be done by Vikram Kumar ji. Friends, the act is toddler, it's evolving. Lot of things are on the way, which we will witness in IBC 2.0. The time has come when the country is progressing like anything. The GDP rate is one of the best rate across the world. And amid this, we will witness that the insolvency and bankruptcy matters will also be taken to the best of the regulations of the lawmakers. Friends, insolvency is not a new term to us, though we have done it previously also, but in coming time, we will witness the IBC for the partnership and individual also. Cross-border insolvency, which we were expecting soon, that is somehow deferred by the government. And with regard to the cross-border, certainly a new law will prevail in coming time. Voluntary liquidation is very core to the heart of each and every professional, because there are a lot of companies which are not able to perform the certificates, not only funds, but the manpower also, regulations, law of the land, environmental things, and of course, the vision of the management. So, voluntary liquidation is must for the organizations which are not able to survive within the scenarios and circumstances. So, speaker of the today's program, Vikram ji, will deliberate us and let us know how the voluntary liquidation can take place, what are the provisions, and how the professional can take the voluntary liquidation as good opportunity for practical. So, friends, I once again welcome each one of you from core of my heart. I request all the participants that if you want to be a speaker, you want to be moderator, you want to be resource person, please write to the secretariat, connect to Rita Madam, or you can directly connect to me. And we certainly look for so many people, because a lot of works we are planning in the committee that needs more and more resources to accomplish. One more announcement that I would like to give, that we are planning an international conference in Singapore on 4th and 5th of August. Probably we will finish the entire program within a week, and I'll request each one to kindly join this international exposure, not only for professional updation, skill upgradation, but also for one of the best networking place. That is for all of us professionals, which is one of the oldest country for the insolvency and bankruptcy, that is Singapore. So I request you please, whenever we open the registration, you please get yourself registered and join the program in Singapore. By these words, once again, I welcome all the respected participants, very learned speaker, and my good friend, Sri Sakuja ji, as moderator of the session. And of course, behind all this thing, one name comes in my mind, that is Madam Rita, who keeps on working, day and night for, resources, skill development, and knowledge dissemination for the professional insolvency and bankruptcy. So thank you, Rita Madam, and over to you for furtherance of the program.
Thank you. Thank you so much, Chairman Sir, for your address and for setting the tone of today's discussion on voluntary liquidation process under IBC, and also making very important announcement for the benefit of the members. Thanks indeed to you, sir. So with your permission, I would like to take this opportunity to introduce the speaker of the session today, Vikram Kumar sir, and the moderator Puneet Sakuja sir. Vikram Kumar, he is a chartered accountant with over 30 years of experience with CISA USA, CMA Australia, and DISA India accreditations, and an insolvency professional. His academic qualification ranges from business valuation, certified management accountant, member Institute of Internal Auditors USA, certified information systems auditor CISA, and information systems auditor. He has been appointed as an IRP RP liquidator in various important cases under IBC. He has also made presentations on IBC at various institutions. He has also contributed to IPA journals with articles titled Pre-Pack Insolvency Resolution Process for Real Estate Developers, Challenges and Road Ahead, Payment to Dissenting Financial Creditor under IBC, and many more. Welcome to Vikram sir. Now I would like to introduce CA Puneet Sakujaji. He's an experienced chartered accountant with over 17 years of expertise in finance and taxation. Also, he has the IFRS certification from ICI. He is a certified forensic auditor. He has conducted statutory and internal audits for several corporates. He has extensive experience in GST and its implementation. He has represented clients before revenue authorities in income tax appellate proceedings. He's a qualified insolvency resolution professional registered with IBBI. Thanks and welcome to you also, Puneet sir. Now, I would request Puneet sir for your initial remarks, and then you may hand over the session to Vikram sir. Over to you, Puneet sir.
Thank you, Rita ji. Thank you. I thank Mr. C.A. Gyanchand Mishra ji, Chairman of Committee, C.A. Rajendra Kumar ji, Vice Chairman of Committee in absentia, Rita ji, Secretary of the Committee, for planning knowledgeable webinar on the IBC regularly and giving me opportunity to moderate the session. I welcome C.A. Vikram Kumar ji for sparing his valuable time for the session. Today we are doing webinar on the important aspect of corporate insolvency law, the voluntary liquidation process under the Insolvency and Bankruptcy Code. This process, governed by the IBC, provide an orderly and efficient mechanism for liquidation of insolvent companies. C. Vikram Kumarji will share with you some practical insight into this process and highlight its significance in the corporate world. Firstly, let us understand the concept of voluntary liquidation. Voluntary liquidation refers to process through which a company voluntarily initiate its own liquidation proceedings with the consent of its shareholder and creditors. Unlike other forms of the liquidation, such as compulsory liquidation initiated by external party, voluntary liquidation allows the company to take a control on its own destiny and wind up its affair in an organized manner. Most important aspect of the voluntary liquidation is clear and timely communication between the company, its shareholder, creditor, and the liquidator is essential to maintain the transparency and address any concern or disputes that may arise. It is crucial to keep all stakeholders informed about the progress of liquidation process, including the sale of asset, settlement of claims, and the distribution of proceeds. So with these words, I welcome Mr. C.A. Kapoor for this session and providing the practical insight over the voluntary liquidation. So over to you, sir.
Yeah, thank you very much, Puneet ji. So, ma'am, with your permission, we can start, right?
Yes, sir. Yes, sir.
Just a minute, Vikram ji, I request all the participants to have their questions on the chat box. So we will take all the questions or all the questions in the 15 minutes question and answer session after this session. Thank you.
So just wanted to confirm, the presentation is visible to everyone
Yes, sir. Yes, sir.
and the presentation is moving, right?
Yes, sir. It is moving.
Moving. Thank you very much. So I, thank you, Rita Madam, for the opportunity given to me, and thank you, Gyan sir, and thank you all the participants to have found time to join the session. So before we actually begin the process and discuss on the presentation, I want to give a very quick overview on the process because I understand that a lot of participants might be completely new to the IBC process. So in the larger interest of everyone, let me give you a very quick overview so that participants are better informed. So under IBC, the process starts with a default. So default is the trigger point which entails the initiation of any process under IBC. But it is very important to note that voluntary liquidation is an exception to the rule because voluntary liquidation starts without a default. So what I'm trying to say is that all the other processes under IBC starts with a default. This is the only process which starts without a default. So there should not be a default to start a voluntary liquidation. That is the first important point. Second point I want to make is that there are two main processes under IBC. First is the resolution process. Second is the liquidation process. So resolution process is basically trying to revive the company. And if the revival or the resolution process fails, then liquidation is an automatic process. It has to be liquidated. So the first stage is resolution. Second stage is liquidation. Now the resolution process starts with an order of the court. The resolution process is called as CIRP or Corporate Insolvency Resolution Process. And the process starts with an order of the court. Court is NCLT here. Liquidation process also starts with an order of the NCLT. However, it is very important to note that in voluntary liquidation, since it is a voluntary process, there is no order of the NCLT for initiating the process. The process starts with a resolution passed by the shareholders of the company. And with that, the process starts. So we do not have any court order to start a process. Now, normally, what difficulties or challenges we face is the bankers who have to compulsorily open a bank account under voluntary liquidation as well, they are a little skeptical in opening a bank account for a company under liquidation because you have to use a word, name of the company dash under voluntary liquidation. So they want an order of the court. So we have to virtually explain them that the company is under voluntary liquidation as per the provisions of the Act, and we do not have an order of the court to initiate the process. That is the second distinguishing feature of a voluntary liquidation. Now, the third distinguishing feature of a voluntary liquidation is that you have to first start a CIRP process, and if the CIRP fails or the resolution process fails, then only you can start a liquidation process. But in voluntary liquidation, you can straight away start a liquidation process. So these are the three important distinguishing features of a normal liquidation with a voluntary liquidation. With this background, I think we should start this presentation. If you have any queries or if you have any issues to ask, please feel free to put your queries on the chat box, and we will be very happy to address your queries. So let us begin the presentation. I would just take a minute to explain the structure of the code for the benefit of the larger audience. So the code or the IBC code is divided into 5 parts. So if you see, part 2 contains CIRP and liquidation. That is section 4 to section 77A is part 2. Resolution process and liquidation process is contained in part 2. Now let us go to the details of part 2. So if you see part 2, chapter 2 contains the CIRP process or the resolution process. Chapter 3 talks about the liquidation process. Now chapter 5 talks about the voluntary liquidation process. If you notice here, there is only one section under the code for voluntary liquidation. That is section 59. However, it is important to note that sections of liquidation process, that is 33 to 54, a major part of that section is also applicable to voluntary liquidation. So section 35 to 53 are also applicable to voluntary liquidation process. So this is just the overview of the, just to give you a basic understanding. Now let us start the actual presentation on voluntary liquidation. So if you see on the slide, I have given you the various modes of exit or closure of a company. So we have two modes, primarily either under Companies Act or under the IBC code. So under IBC, we have only two processes to exit. Either we go through a liquidation process or a voluntary liquidation process. Our discussion would be only subjected to voluntary liquidation. Now under the Companies Act, we have other various options of exit, like striking off, you're all aware, dormant status of a company, mergers and acquisitions, and summary liquidation. So these are the possible options available to liquidate a company. Now, as informed to you earlier, if you read section 59, subclause 6, it says section 35 to 53 of the code are also applicable to the voluntary liquidation process, mutatis mutandis. So that is a Latin word, which basically means that making necessary changes will then apply to voluntary liquidation. So wherever you are using the term liquidation, that will be replaced by voluntary liquidation. So I'm not getting into the details of these sections. We will be discussing, these sections as we discuss on the presentation. But section 35 to section 53 are applicable to voluntary liquidation. Only two sections have been excluded, 33 and 34. Now, as I told you, that voluntary liquidation starts when there is no default. So the very first section of 59 subclause 1 says, a person who intends to liquidate itself voluntarily and has not committed any default may initiate voluntary liquidation process under this chapter. So it's important to note that you need to be a corporate person, because part 2 is only relevant for a corporate person. You need to be a corporate person. You should not have committed any default, and then you are eligible to initiate a voluntary liquidation process voluntarily. That is the definition of section 59(1). Now, before we discuss the other provisions of the Act, it is very important to understand what is the objective of voluntary liquidation. Because why we want a voluntary liquidation is that they are twofold. Number one, we want to return the capital of the shareholders. The money is lying into the account of the company. Primarily, these monies are belonging to the shareholders, and we want to return the capital to the shareholders. And second, we want to dissolve the company because we're not interested in running the company, or the objective for which the company was incorporated has been met. That is the primary intent or objective of initiating a voluntary liquidation process. Now, let me explain. We have used the term a corporate person. Under law, every word has a significance or a special meaning. So corporate person is defined under the Act or the code under section 3, subclause 7. Now, what is the definition of a corporate person? It basically includes limited entities or artificial persons who are incorporated entities as covered under section 220 of the Companies Act. However, I have highlighted on the slide, shall not include any financial service provider. So if an NBFC or a bank cannot go for a voluntary liquidation process under the IBC provisions, there are special provisions for financial service providers under section 227. For example, like Reliance Capital, which is undergoing a process of resolution, or Diwan Capital, Diwan Housing. All these companies which went into the process of resolution, we had a special provisions under IBC under section 227 through which the companies can be resolved. So we are not going to discuss on that issue, but I just wanted to brief you on this issue as well. Now we also, let me also explain one important point to you. We also use the term default here. The company has not committed any default. Now default is the starting point under IBC. So it is very critical to understand what do you mean by default, because there should be no ambiguity in understanding what is a default. And there are three terms very, very closely interrelated to default. So one is the claim, second is debt, and third is default. So let me explain you very quickly what do you mean by these terms claim, debt, and default, and how these three terms are interrelated to each other. So these three terms are very closely interrelated. When we say claim, claim simply means a right to payment. So for giving an example, suppose you are a supplier of goods. You have supplied goods to a company, XYZ Limited, and the terms of payment is 30 days. So today you supplied the goods, you have a right to payment, but your payment will become due on the 30th day. So when the payment becomes due or the claim becomes due, it becomes a debt. So on the 30th day, your claim will be converted into debt. So initially it is a claim. On due date, the claim becomes a debt. Now when the debt is not paid on time, it becomes a default. So this is very important to understand the relationship between a claim, debt, and default. So I have tried to put it in this slide. First we have a claim which gets converted into a debt, and debt finally not paid on time becomes a default. So this is the fundamental of IBC. That's the reason why I thought it prudent to explain what do you mean by default. Now let us discuss what are the preconditions for voluntary liquidation. As I told you, there should be no default. So the starting point of a voluntary liquidation is that the directors of the company have to give an affidavit, and they have to give a declaration on affidavit. There are 3 points which needs to be covered under the affidavit. Number one, the company has no debt, or it will be in a position to pay its debt in full. So we are not seeking any default on debt. We are not seeking any haircut. We are in a position to pay the entire dues. That is the first point. Second is, the company is not being liquidated to defraud any person. The intent is not to defraud any person. And third, the corporate person has made provisions for preservation of its records after its dissolution. These are the 3 points which has to be incorporated in the declaration under an affidavit. That is the first point. After the directors have issued the declaration, within 4 weeks of the said declaration, within 4 weeks, a special resolution has to be passed by the members of the company that the company should go for a voluntary liquidation, and appointment of a liquidator who should be an insolvency professional who should act as the liquidator for the process. Now the third point is, it is possible that there are some outstanding debts in the company. If the debts are outstanding in the company as on the liquidation date, then the special resolution passed by the members of the company needs to be approved by 2/3 in value of the creditors, that they are also okay for the company to go in for a voluntary liquidation. So these are the 3 important prerequisites to initiate a voluntary liquidation process. First is the declaration under affidavit. Second is the resolution by the members. And if there are creditors, they have to also approve the resolution by 2/3 majority. So with this background, we can start the discussion on voluntary liquidation. Let me now, take you to one important Excel sheet. I think that would be very helpful to the participants. So let me stop this presentation for a while. And let me try to upload the presentation. Is this Excel sheet visible?
Yes, sir. Yes, sir. Visible, the Excel sheet.
It's fine, no?
Yes, sir.
Okay.
Maybe you can put it on full screen.
Acha. Okay. Let me see.
Thoda sa
Okay.
font size is looking small.
Okay. So I'm not able to actually make it full screen.
Yeah, a little bit zoom maybe.
Okay. But this is not.
Yeah, yeah. It's better now, sir. It's better.
It's
Much
better.
better. Yes, sir. Yes, sir.
You can see all the rows and columns, right?
Yes, sir. Yes, sir.
Okay. So I'm sharing this Excel sheet. Basically, the purpose is whenever we take any assignment for voluntary liquidation, IBC is very time, the essence is timeline. So it's very important to, take a control on the timelines of the process. So how do we, ensure that, we are within the timelines? So this is the Excel sheet we prepare, that what is the activity to be done? What is the actual date when we have done that activity? What is the due date of that activity as per the code? And whether we have done it in timelines or not, and what is the regulation under which it has to be done? What are the ROC filings to be done? All these are there in this Excel sheet. It becomes very handy to, run the process and maintain the timelines. So as I told you, first step is the affidavit. So all these 3 points are stated here. Now, if you see below this Excel in row number 5, I have stated there are certain documents to be attached with that affidavit. The first document is audited financial statements of the company. And second is records of business operations of the company. Now, these audited financial statements are to be enclosed for previous 2 years or for the period since incorporation. And number 2, we have to include records for business operations of the company. These 2 records have to be attached. And the third record which has to be attached is the valuation report of the assets of the company as on the date when the declaration is being given by the directors. So whatever assets are there in the company, the valuer has to be appointed and he has to attach a valuation report. So this is what is, basically we have to do. And if you see here, declaration, I'm written on the timelines. T is the timeline, that is the 0 date, T minus 28. So what I'm saying, my minus 28 is that you need to take an action for a declaration 28 days prior to the 0 date. 0 date is the insolvency commencement date. Now, once you issue a declaration, you need to give at least 7 days time to conduct a board meeting. And you need at least 21 days time to have a general meeting, EGM. So basically this 7 plus 21, 28 days, you need to have a minimum timeline for having the declaration. So you issue the declaration, then within 7 days, you can have the board meeting. And then on the 28th day, you can have the EGM and you can get your resolutions passed. So I'm stopping this Excel sheet and going back to my original slide. So the slide is visible to everyone, right?
Yeah, now you have stopped sharing the screen.
Okay, let me again try that.
So this is a piece for the entire travel desk work, not for.
No problem. So let me put it full screen. Is it now full screen? It is moving, ma'am?
Yes, sir. Now it has come full screen. Yeah.
It is full screen, right?
Yeah. Yeah.
Right. So the Excel sheet I had basically shared just to know in case you are handling any live assignment, then it becomes very handy to control the timelines of the process. So the second, one important point we have to now understand is what is the liquidation commencement date for voluntary liquidation. So section 59(5) tells you what is the liquidation commencement date. So technically, the date on which you pass the special resolution is the liquidation commencement date. But however, if you read the language of section 59(5), it says subject to the approval of creditors. So if there were no debt, no outstanding creditors, then the date on which the special resolution is passed becomes the voluntary liquidation commencement date. However, if there are creditors, then they also have to approve the resolution by 2/3 majority. So and 7 days is given to approve the resolution of the shareholders. So technically, the 7th day from the day of passing of the resolution becomes the liquidation commencement date. So I have given in the slide a small, case example that there are two possibilities. There are creditors and members pass the required resolution with 2/3 majority, or the creditors do not approve. So if the creditors do not approve, then voluntary liquidation cannot begin. So that is the reason why the timeline is stated as subject to the approval of creditors. So in the example, if you see, on 10th January, members approve the resolution and the creditors approve the resolution on 17th January, then 17th January becomes the liquidation commencement date. So this is very important because the commencement date, you cannot go wrong. All the timelines are calculated from the commencement date. So the zero date becomes here the 17th January and not the 10th January. If there were no creditors, then 10th January would have become the zero date. Now this is the flow chart for voluntary liquidations. Let us spend about 10 minutes time to understand this flow chart. So as I told you, the first step is the declaration by the directors. So if you see on the extreme left block, you will see declaration of solvency by directors. DOS stands for declaration of solvency. I have also given the reference to the section or the regulation below the box so that, once the slides are shared with you, you can also go through at your convenience and see what are the provisions of the relevant, codes and regulations. So regulations, we also have a regulation here for voluntary liquidation, and major part of the process has been covered into the regulations. So once we have approved the affidavit, after affidavit, we get 4 weeks time to pass the resolution. So second step is passing of the resolution in 4 weeks time. Third is the approval by the creditors of the said resolution. Now, once the creditors have approved, then the first job of the liquidator is to issue a public announcement, and 5 days is given to issue the public announcement. So T+5 becomes the last date for public announcement. Public announcement is basically issued inviting claims from the stakeholders who might have any claim on the company. Now, 7th day, the liquidator has to inform IBBI, that is our regulator, about the appointment of the liquidator. Now, the resolution also has to be submitted to the ROC and IBBI about commencement of liquidation process. However, if the resolution has to be approved by the creditors, then T7 becomes T14 because you get 7 days time to get it approved from the creditors. Now 30 days is given for submission of the claims. So T+30 becomes the last date for claim submission. Now, once the claims are submitted, the stakeholders who have given the claim get an opportunity to modify or withdraw their claim in 14 days time. So 30 plus 14 becomes T+44. Now, by the 45th day, the liquidator has to submit a preliminary report to the corporate debtor or the corporate person. So the liquidator will submit a preliminary report. We will discuss what are the contents of preliminary report later. So by 45th day, T plus 45, the liquidator will submit a preliminary report. Now 30 days is given to the liquidator to verify the claim from the last date of submission. So T plus 60 becomes the last date for claim verification, 30 days for claim submission, 30 days for claim verification. So T plus 60 is the last date for claim verification. Now, if the liquidator rejects any claim, he gets 7 days time to intimate to the stakeholder that his claim has been rejected. So T plus 67 becomes the last date for rejection or intimation of the rejection of claim or acceptance of claim. Now, we have to prepare a list of stakeholders. So who is a stakeholder? A stakeholder is a person who has a claim on the company, or he is entitled to the receipt of claims from the company, from the liquidation estate. Now there are two timelines here, 45 and 75. Let me explain you what is 45, what is 75. Suppose no claims are received by the company. If there are no claims received by the company, then the list of stakeholders must be prepared by the 45th day of the liquidation commencement date. However, if claims are, yeah. Somebody wants to ask a question? Or I can continue.
Please continue, sir.
Okay. I thought somebody wants to ask something. No problem. So if there are no claims, then you get 15 days from the last date for submission of claim to prepare a list of stakeholders. However, if claims are received, then you get 45 days to prepare the liquidation, the list of stakeholders. So that becomes 75th day. Now, once the list of stakeholders has been prepared, now suppose a claim of a creditor has been rejected by the liquidator. So he gets 14 days time to appeal against the decision of the liquidator. So T plus 67 plus 14, that becomes 81. T plus 81 is the last date of filing appeal against the decision of the liquidator whereby he has rejected your claim. Now, once that process ends, then start the distribution of the liquidation estate. So after 30 days of the realization of the proceeds, the liquidator can start the distribution under regulation 35(1). Now, if suppose there are some amount lying with the liquidator unclaimed, or the liquidator is not in a position to distribute the claim, then he has to deposit the unclaimed amount into corporate voluntary liquidation account, which is maintained by IBBI. So he has to deposit that amount, and then only he can proceed to submit a final report to ROC and IBBI. So again, there are two timelines here, 90 days and 270 days, where the special resolution was approved by the shareholders and there was no need to get it approved from creditors. Then you have 90 days to complete the process of voluntary liquidation. However, if there are creditors who had approved the special resolution, then the timeline is 270 days for completion of the process. That is why I have written T90/T70. And wherever I use an asterisk on the timeline, I have written below applicable where approval of the creditor was not required. Wherever it is required, then it becomes 270. And finally, within 270 days, the liquidator is supposed to submit the application for dissolution of the company, because by 270th day, he should have distributed all the assets. Sorry, he should have realized all the assets and paid all the liabilities of the company. So this is in a nutshell, the entire flowchart for a voluntary liquidation process. Now, what is the qualifications to become a liquidator? So first and foremost is the liquidator should be independent of the corporate debtor. If he has any nexus with the corporate debtor, he cannot be appointed. he has to be an insolvency professional, and he has to be independent of the corporate debtor. Now, suppose he is a member of an IPE, insolvency professional entity, then all partners, directors of the IPE should also be independent of the corporate debtor. That is the primary requirement. Now, who is considered independent of the corporate debtor? A person who is eligible to be appointed as an independent director of the corporate debtor would be considered as an independent person. He is not related to the corporate person. We have a definition of related party under IBC. So he should not be a related party of the corporate debtor. He should not be an employee, proprietor, partner during the last 3 years of a firm of auditors of the corporate person. Please remember, auditors are not considered as independent. So if you have been the auditor of the company, you cannot become a liquidator of the company. And if you are a member or a partner of a law firm who has more than 10% of the income of the firm from that corporate debtor, then also you are not eligible. Now, there should not be any disciplinary orders against you from IBBI or the IPA. That is the second requirement. And if there is any pecuniary relationship between the liquidator and the company, it should be immediately disclosed by the liquidator. So that is the primary requirement, that you should be independent of the corporate debtor. Now, this is a very important slide. What are the consequences of commencement of voluntary liquidation? So you have to refer to Regulation 4 of the voluntary liquidation process. Now, what Regulation 4 says, that on the commencement of the voluntary liquidation, the corporate debtor will cease to carry on business. So it is presumed that you want to now close all your businesses. That is why you are going in for voluntary liquidation. So you are supposed to cease to carry on businesses except for beneficial winding up of the business of the company. That is point one. Second point is very, very important. The company or the corporate debtor exists till its dissolution. Unless and until you get the order of the NCLT approving liquidation and passing an order for dissolution, your company exists. So you have to carry on doing all statutory compliance says for the company up to the date you get the order from the NCLT approving dissolution of the company. Now, since the company is existing till its dissolution, so the registered office of the company will also stay and continue. Now, the fourth point is, now, would the commencement of liquidation amount to discharge of employees? So Section 33, subclause 7 talks about discharge of employees. And what Section 33(7) says? Order for liquidation. Now, this is not the voluntary liquidation. This is the normal liquidation, which happens after CIRP. So order for liquidation shall be deemed to be a notice of discharge to the officers, employees, workmen of the corporate debtor. Now, please note, Section 35 to 53 are only relevant for voluntary liquidation. Section 33 is not relevant for voluntary liquidation. However, in my view, I have given my view. My view is that voluntary liquidation will also tantamount to a notice of discharge to the employees because we have ceased to carry on any business. Even though Section 33 subclause 7 does not come within Section 35 to 53, but because you have ceased to carry on the business, so I'm of the view that the employees will cease to carry on, will cease to exist because the company has stopped the businesses. Now, the next point is also very, very important regarding moratorium. Do we have any moratorium under voluntary liquidation? That is the important point to be answered. Section 33 subclause 5 talks about moratorium. Now, Section 33 is again now outside Section 35 to 53, which is not applicable to voluntary liquidation. So there is no moratorium available under voluntary liquidation. I have written it in bold here. No moratorium is available in voluntary liquidation. because here the objective is very different. We want to distribute the capital lying in the company books of accounts to the shareholders, and we want to dissolve. We do not want any haircut, or we are not insisting on any non-payment of debt. So there is no moratorium available during voluntary liquidation. Now, the claims to be filed by the stakeholders is as on the liquidation commencement date. So all your claims up to the liquidation commencement date has to be filed with the liquidator. Now, the last point on this slide is a very, very important point, and I think, this needs a little deliberation. So, will voluntary liquidation tantamount to the suspension of the powers of the board of directors? So there are two schools of thought. Somebody has an opinion that it amounts to the suspension of the powers of the board. However, I am of the firm view that under voluntary liquidation, powers of the board of director is not suspended. Now, why I'm saying so is, I'm giving you my reasons here. The provisions pertaining to the suspension of the powers of board is contained under section 17, 1B, which is outside section 35 to 53. That is the first point. Second point is, voluntary liquidation actually starts with a resolution passed by the board of directors. And the board is actually driving the entire process. The next point is, if you read regulation 31, which talks about the manner and mode of sale of the assets in voluntary liquidation, the manner and mode of sale of the assets is to be decided by the corporate person. So naturally, the board is functioning. That is why they are in a position to decide. And lastly, preliminary report prepared by the voluntary liquidator has to be submitted to the company, which is basically the board of directors. So had there been no board, why would a liquidator submit a preliminary report to the board of directors? So I have given my reasons. If anybody among the participant believes that the power of the board is suspended, I am happy to discuss and understand why they think so. But I have given you my point of view. Okay. So the next point we want to discuss is on the valuation during a voluntary liquidation process. So when do we need to do a valuation? If you remember the Excel sheet I had shown you, there are certain documents to be attached with the affidavit given by the directors. One of the attachment is the valuation of the assets of the company as on the date of declaration or the affidavit. So the directors have to get the assets of the company valued by a registered valuer. Incidentally, IBBI is also the regulator for valuers. So they have to attach a valuation report with the affidavit. Now, one more requirement can arise for valuation under the liquidation processes given under regulation 38, that is final report. At the fag end of the process, the liquidator prepares the final report, and when he's going to sell the assets, if there is a shortfall in the value of the realization between the valuation done at the affidavit stage and at the sale stage, if there is a significant difference, then the valuer can actually get revaluation done to understand why the shortfall is there. So these are the two requirements under which the valuer might go for a valuation. Now, the first report, which is prepared by a liquidator under voluntary liquidation process, is the preliminary report. So regulation 9 talks about preliminary report. Now, what are the contents of preliminary report? It basically contains the capital structure of the company. So what is the authorized capital? What is the paid up capital? If there is any, money, call notice pending, call money pending for payment, all those details have to be given under the capital structure. Second is the estimates of the assets and liabilities on the liquidation commencement date as per books of accounts. So it's always a good idea to get the books, to get an audited accounts taken from the company as on the liquidation commencement date, so that you exactly know what are the assets and liabilities of the company, so that what assets have to be disposed of is known to you. So normally we go in for an audit and get the balance sheet prepared as on the liquidation commencement date, duly audited, which gives us the details of assets and liabilities as on the LCD date, liquidation commencement date. Third is that if examining the books of accounts, whether the liquidator believes that he needs to make any further inquiry into the reasons for failure of the company, or why he has some doubts on the conduct of the business of the company, then he has to give reasons why he wants to go into further inquiries of the company. Then what are his action plan and estimated timelines and the estimated liquidation cost for completion of the liquidation process. So he has to give the estimated liquidation cost, estimated timelines for completing the process, and what is his action plan, how he proposes to complete the process. And this report has to be submitted to the company in 45 days from the liquidation commencement date. So that is the T plus 45. Now, after the issue of public announcement, the stakeholders can submit their claim. So regulations 15 to 19 will tell you what are the various forms under the voluntary liquidation process for submission of claim. So for an operational creditor, we have Form B. Operational creditor can submit the form in person or in post or by electronic means. However, a financial creditor can only submit the claim form in Form C in electronic means. Now, workmen can individually submit the claim in Form D, and collectively they can submit the form in claim Form E. And lastly, if there is any other stakeholder, he can submit the Form F for submission of claim before the liquidator. And 30 days is given for submission of claim. So T plus 30, that is the last date for submission of claims. Now, as I told you, list of stakeholders is prepared after the 30th day. So there are two timelines: when no claim is received, then T plus 45, where claims are received, then T plus 45, then 75. That is the 75th day from the liquidation commencement date is the timeline where claims have been received by the liquidator. Now this list of stakeholders has to be uploaded on the website of IBBI, and it is also to be displayed on the website of the corporate person if there is any website. Now, what will the list of stakeholders contain? It will contain the amount admitted, what is the amount of secured, what is the amount of security, and what are the details, that is the name, address of the stakeholder. Now, realization of assets by the liquidator and claiming unpaid capital. So basically, Regulation 31 says that the liquidator can sell the assets in the manner and mode as approved by the corporate person. So the board of directors will basically decide in which way the assets have to be sold, and the liquidator will sell the assets accordingly. Now, the liquidator has to endeavor to recover the money at the earliest and deposit it into the bank account opened by the liquidator in a bank account. If there are any uncalled unpaid capital, that is basically any claim prior to the liquidation commencement date, then the liquidator has to realize that amount. Now, if any contributor does not pay the unpaid capital, then he will not be entitled to receive any distribution under liquidation. Now, I was talking about the bank account. So Regulation 34 says that a liquidator has to open a bank account in a scheduled bank, and the name of the company should be followed by involuntary liquidation. He has to ensure that every money collected by him is deposited into the bank account by the next working day. He cannot make any deduction from that amount. He has to make all payments above 5,000 rupees from that said bank account. And the bank account has to be opened under the signature of the liquidator, maintained by the liquidator. Now, section 53 is one of the most important sections of liquidation, because this explains you about the waterfall or the priority under which the money will be distributed by the liquidator on liquidation. So who will get first, who will get second? So there are 8 priorities. The topmost priority goes to the liquidation cost. So the fees of the liquidator and any expenses incurred by the liquidator in the liquidation process will be paid first. The second priority comes is of the secured creditor who has relinquished his security interest. And the amount of a secured creditor is pari passu with the dues of workmen up to 24 months from the liquidation commencement date. So the dues of secured creditor and the dues of workmen up to 24 months have an equal footing, pari passu charge on. Both of them are to be distributed equally. Pari passu basically. Third is the employees up to 12 months. Fourth comes unsecured financial creditors. Fifth is the government dues up to 2 years. Sixth comes the operational creditors and other creditors. Seventh comes the preferential share capital or preferential shareholders. And last is the equity shareholder. This is the priority in which the payment has to be made by the liquidator. Now, what is the timeline for completion of liquidation? I've already told you 90 and 270, there are 2 timelines. So where the resolution was approved by the creditors, then the timeline is 270. And where there were no creditors, then the timeline is 90 days for completion of liquidation. Now, in eventuality where, suppose you exceeded the process by more than 12 months, then in that case, the regulation 37 says that it is compulsory to have a meeting of the contributories within 15 days of the expiry of 12 months. And that meeting will also include an annual status report. So what are the contents of an annual status report? It will contain the list of stakeholders who have already been settled or paid by the liquidator, details of the asset that remains to be sold and realized, distribution made to the stakeholders, distribution of unsold assets made to the stakeholders, any material litigation. If the liquidators filed any avoidance application, then the details of the avoidance application and the audited accounts of the liquidation from the liquidation commencement date has to be also enclosed with the annual status report. So basically, the audited receipt and payment from the liquidation commencement date has to be enclosed with the annual status report by the liquidator. Now comes the final report. So final report is the last report prepared by the liquidator under regulation 38. Now, what are the contents of a final report? It contains the audited accounts of the liquidation showing receipt and payments from the liquidation commencement date. Now he has to confirm that the assets have been all disposed of. There are no assets lying in the company. There are no debts outstanding for payment in the company. All the creditors have been paid. There is no litigation pending or sufficient provision has been made to meet the obligations of pending litigation. Now here, suppose there are some uncrystallized liabilities, then he has to take an indemnity from a contributory stating that if any liability arises in future, then the said contributory will meet the obligation. Now he has to attach a sale report of the assets. What are the contents of sale report? The realized value of the asset, the cost of realization, the mode of sale, and if the value is less than the value as per the valuation report given at the time of affidavit, then the reasons of the shortfall. All these details have to be included in the sale report and attached to the final report. Now, as I told you, the treatment for undistributed or unclaimed amount, it has to be deposited into the corporate voluntary liquidation account maintained by IBBI. If the liquidator fails to deposit, then he has to deposit the same amount with 12% interest. Now, whatever amount is deposited by the liquidator has to be submitted in form number G with IBBI. And if a stakeholder wants to withdraw that amount from the corporate voluntary liquidation account, then he can withdraw that amount in 15 years period from the date of deposit by submitting form I to IBBI. And after 15 years, IBBI will transfer the amount lying in that account to the Consolidated Fund of India. That is, how we basically close the process and then file the application to NCLT for closure of the process. Now, what are the circumstances in which you can actually suspend the voluntary liquidation process? So there are two possibilities. Regulation 40 says, number one, where the liquidator believes that liquidation has been done to defraud any person, then he has to make an application to the court requesting the court to terminate the process. And second is where the company is not in a position to pay all the debts, because the directors had made a declaration in the affidavit that they will be in a position to pay all debts. If he is not in a position to pay all debts, then also the process will be suspended. Now, there are some very important, taxation aspects to voluntary liquidation. So let us now briefly discuss what are the issues involved in taxation. So we are all aware about section 2, subsection 22 about dividend. So any dividend distributed to the shareholders under liquidation is taxed as dividend. So any amount received by a shareholder over and above the share capital contributed by him. So all accumulated profits which are distributed to shareholders under liquidation is taxable as a dividend. Now, the second section important is section 46 subclause 2, which says if suppose there are assets in the company and the assets are sold, then you have to pay capital gains tax, and over and above the capital gain tax, if there is any amount left, then again you have to pay the dividend distribution tax. Now, section 178 of the Income Tax Act is also very important with respect to liquidation. So what section 178 says that the liquidator has to inform the income tax officer about the appointment and commencement of liquidation. And the assessing officer can actually assess what is the amount of income tax liability of that company, and the liquidator has to ensure that that amount is retained and not distributed to stakeholders during the process. However, section 178 is not applicable to IBC. So these provisions are not applicable to a voluntary liquidation process under IBC. Now, earlier when we used to do voluntary liquidation under IBC, we used to always get an NOC from the Income Tax Department stating that there are no dues with the Income Tax Department. But now, the IBBI came out with a circular dated 15th November 2021, wherein the IBBI has clarified that NOC is not required to be taken from the Income Tax Department because that was delaying the whole process. So IBBI said there is no need to obtain any NOC from Income Tax Department. Now we have a few case studies here just to explain, how the distribution happens in voluntary liquidation. If you remember, the first few slides, I told you the objective of voluntary liquidation is to primarily distribute the capital to the shareholders and to dissolve the company. So you will see in these case studies and section 53 also you have to remember the priority in which the payment has to be made under the IBC. So this is the first case study. If you see here, normally in voluntary liquidation, the balance sheet is in a very simple format. You have the share capital and you have maybe some debts or some liabilities and you have cash and bank balance. That is the normal structure for a balance sheet under voluntary liquidation. So suppose if you see this balance sheet, I'm sure the directors would have no problem in giving an affidavit that the company has no debt or the company has sufficient money to pay off the remaining debts. Because here, if you see, the company has a balance of 1,000 rupees, the debt is only 100 rupees. So what will happen is this 1,000 rupees will be distributed first and foremost as per section 53. The debts will be paid. So 100 rupees goes for debt. The balance 900, preference share capital has a higher preference over equity. So 900 will be paid to preference shareholders. If there was any balance amount, that would have been paid to equity shareholders. Since it is only 1,000 rupees, so 900 goes to preference and 100 goes to debt, and equity shareholders will not receive any money. This is the second scenario. Here you have 1,000 rupees. You have a debt of 100 rupees. You have a preference capital of 500 rupees. And it says premium on the issue of preference capital is 400. So what is the distribution here? So 100 rupees will go to debt. Please note, preference capital will get 500 rupees and the balance amount will go to equity shareholders, because the preference equity premium or the preference premium amount account is not outstanding in the balance sheet. So there is no premium outstanding, share premium account. Hence, the 500 rupees contributed by the preference capital shareholders will be returned and balance amount will go to the equity shareholders. In the third scenario, we have 600 rupees. So 100 rupees goes to the debt for payment of debt. 200 goes to the preference shareholder. Sorry, there are 200 rupees to preference shareholders, and there is a redemption premium of 200 to be paid at the time of redemption. So 400 rupees goes to the preference shareholders and balance 100 rupees goes to the equity shareholders. In the fourth scenario, it says that there is a certain premium payable on redemption of equity shares. So please note, there is nothing called as redemption on premium on redemption of equity shares. That is just a kind of a googly here. So we will pay 100 rupees debt. We will pay 200 rupees to the preference shareholders, and balance amount will go to the equity shareholders, that is 300 rupees. And in the last case study, if you see, there are two types of preference shares, 400 and 300 rupees. So 100 will go to debt, and out of balance 500 rupees will go to the preference shareholders in proportionately to S1 and S2, and there is no payment left for the equity shareholders. So I hope this will give you a basic understanding of the voluntary liquidation process. Now, after that, what I have done is, I have basically, before you ask me any queries, I have listed some very important issues which normally occur in voluntary liquidation. So let us discuss these practical issues. I think then, we can have the question answer session. So the first point is, as I told you, we have to do all statutory compliances under voluntary liquidation. But the point which arises is, do we file AOC 4 and MJT 7 under voluntary liquidation? The answer is no. We will not file AOC 4 and MJT 7, but we will file it through GNL 2, because we have an MCA circular dated 6th March 2020, which says that AOC 4 MJT 7 is to be filed through GNL 2. You can Google this MCA circular 6th March 2020 and you will get this circular. Now the second question is, are we required to file IT returns for a company under liquidation? So as I told you, the company exists till the date NCLT passes an order for dissolution. So all compliances for filing of the income tax returns have to be done by the liquidator. Third point is, can dividends be declared by a company under liquidation? The answer is no, because we are going to anyways distribute the remaining capital to the shareholders. So we are not distributing any dividend. The fourth point question is the liquidator supposed to get the accounts audited? Yes, he has to get it audited. Whenever he files the application for dissolution, he will have to submit the audited receipt and payment account showing what has been realized, what has been paid, how it has been paid, to whom it has been paid. It has to be in audited accounts. up to the completion of the liquidation process. Does the liquidator need to obtain a no due certificate from the income tax department? I've already informed you that it is not required. IBBI has issued a circular dated 15th November 2021. You can also download it and read it. So it is not required to issue any, and liquidators are not supposed to take any NOC from the income tax department. Now, what about contingent liabilities? Normally, if there are contingent liabilities, then it needs to be crystallized for the directors to give a declaration, because if there are contingent liabilities, how would a director know what is the liability on basis of which he can give a declaration that the company would be in a position to pay the debts? So normally it should be crystallized, then only the declaration should be issued. What happens if there is non-cooperation by the directors of the company? Normally this situation would not arise because it is a voluntary process and the company is itself going for a voluntary liquidation. However, if there is a non-cooperation, then liquidator can always approach NCLT and get the directions. Who will get the proceeds from avoidance application? Now the answer is obvious: shareholders, because all the other creditors must have been paid by the liquidator from the assets of the company. If the company had no assets to pay off the creditors, then the process could not have been even started. So any residual amount left in the company will go to the equity shareholders. Now the last two questions are very, very important. Now the question is, I used to often get this query and I have put it on the slide itself. Can a company which has been dissolved be revived? Suppose a company has been dissolved and your claim stands unpaid. What will happen? So the answer is contained in section 252. Section 252 subclause 3 says that from the date of dissolution, you get 20 years time to realize your amount. If your amount has not been paid and you are an aggrieved person, you can make an application to the tribunal, NCLT. And if your amount is payable, then tribunal can revive the company up to a period of 20 years from the date of the strike of the company from the records of ROC. Now, the last query which I had for your understanding is, which is very, very important. Can the liquidator engage the services of existing auditors of the corporate person? The answer is no. I have also given a reference to a disciplinary order passed by IBBI, because if you read regulation 11 subclause 2, it says the liquidator shall not engage a professional who is his relative as a related party of the corporate person or has served as an auditor of the corporate person at any time during 5 years from the liquidation commencement date, preceding the liquidation commencement date. So if a person has acted as an auditor of the company for 5 years prior to the liquidation commencement date, he cannot continue as an auditor of the company. So liquidator normally commits this mistake of appointing the same auditor to continue in the process. Please do not do this. You should appoint an independent auditor and do not continue with the same auditor. Otherwise, you will be subject to disciplinary action. So with this, I conclude my presentation. Thank you very much. And over to, the moderator.
Puneet ji?
I hope I have not exceeded my time.
No, sir. No, sir. Puneet ji is joining. He will put you with the questions which has been received from the participants, sir. They have been continuously putting it in the chat box. Puneet ji has the questions. He is going to.
We can't see the participants, right?
No, sir. We can't see. It's in the webinar mode,
Okay.
so we can't see. Yes, sir. Yeah. Over to Puneet ji. Puneet ji, you may start the Q&A session, sir, with the questions as received.
आ गया, हाँ मैं आ गया, ठीक। हेलो,
हाँ पुनीत जी,
आई एम ऑडिबल?
या एब्सोल्युटली।
सो सर थैंक यू फॉर योर डेलिब्रेशन। बस मेरे पास अभी कुछ लॉट्स ऑफ क्वेश्चंस है, सो मैं एक एक करके क्वेश्चन लेता हूँ। तो पहला क्वेश्चन है, व्हाट आर द प्री रिक्वायरमेंट फॉर द गोइंग टू वॉलंटरी लिक्विडेशन?
Okay. So as I already explained, the prerequisite is that you have to, get an affidavit signed by the directors. The affidavit has to contain 3 points. Number one, the company is going for liquidation not to defraud any person. The company has no debt, or the company will be in a position to pay all the debts, and they have adequate provisions to maintain the records of the company post liquidation of the company. So one is that you have to maintain, you have to give this affidavit. This affidavit has to, contain 2-3 attachments. One is the audited balance sheet for last 2 years, the valuation of the assets of the company. These 2 attachments has to be given. After this affidavit, within 4 weeks of the affidavit, you have to get a special resolution passed by the members of the company, and then you are free to start the process.
Okay, okay. So next question is that, what are the options for lender legal maneuvers to recover maximum loans amount against a borrower who goes into voluntary liquidation, while the overall interest is to protect asset value under IBC?
So I think, the person who has raised this query might have got a little confused with the ordinary liquidation. Please understand, in voluntary liquidation, there cannot be any haircut. Full amount has to be paid. So the company must have at least that much assets that it can pay the full amount, including the interest, to the creditors. And normally, I'll say that in voluntary liquidation, the process starts after all the dues of the creditors have already been paid. So normally, the balance sheet is already cleaned. We have the share capital on one side, and we have the bank balance on the other side. Under that circumstances, normally we start with the voluntary liquidation. So I believe the question is not very relevant to a voluntary liquidation.
Yes, sir. Another question regarding the claim 1. What happens when we do not receive claim from the shareholder already available in books?
Right.
Whether we need to call for proof or verification, or it's sufficient if it is available in the books of account?
So this is a good question. And basically, the shareholders are duly reflected, in the audited balance sheets of the company. So we do not have any doubt. I would love, I have not come across a case where, that the share capital is actually not existing. So whatever is share capital, even if they have not filed any claim, the claim is also not required to be filed, because point is they are the persons who have to get the residual amount left in the liquidation process. So in the list of stakeholders, when we prepare, whatever is the amount of share capital, we put it under the heading of equity share capital and admit that amount and put it in the list of stakeholders.
Okay, thank you, sir. Sir, this question is very practical question and a very long question we have to listen.
Yeah.
So a company has gone for voluntary liquidation. Asset owned by it is big land parcel only.
Okay.
The shareholder have given unsecured loan to the company for purchasing the land.
Okay.
No outside creditor or financial creditor are present.
Okay.
The shareholder have agreed the distribution of land into plot and sharing between them. Can you please explain as to how to got about the same, and also what would be the taxation aspect, considering Section 46 of IT Act from the viewpoint of company and also individual shareholder taxation? What are the points which need to be kept in mind while going through voluntary liquidation? Sir, income tax, IBC, सब कुछ इसमें mix हो चुका है.
पुनीत जी, इसके लिए तो फीस चार्ज करना पड़ेगा हम लोग को. This query cannot be answered without fees.
Yes, sir.
Yes,
वो
sir. Yeah,
मुझे
it's
भी ऐसे ही लग
kind
रहा था,
of
तभी मैंने आपसे कहा कि बहुत practical.
consultation.
This question का answer के लिए, I think we'll have to charge consultation. But
Yes,
anyways,
sir.
anyways,
It is
the
not a
po- the-
general question. Yeah.
no, but it's a good question, ma'am. So I think
Yeah.
we should address. The point is that there is a land on the asset side of the balance sheet, and there is unsecured loan on the liability side, and then we have the equity capital. This is the structure of the balance sheet, right? So
Ji.
presume the land is at a cost of 100 rupees, and the market value of the land is 1000, suppose. So the balance sheet, in the balance sheet, the land is reflected at 100 rupees.
Yes.
Right?
Right.
Now the market value is 1000.
Yes.
So on 900 rupees, the capital gain tax will be attracted. So the company will pay capital gains tax on 900 rupees. And the balance amount gets credited to the reserves and surplus of the company.
Right.
Now the reserve and surplus over and above the equity capital. So all the reserve and surplus will constitute the dividend portion under Section 2, subsection 22C. And the company will have to pay dividend distribution tax, and the amount will be distributed to the shareholders. I think that is the short answer I can give at this point of time.
Right, sir. So next question, what happens to the contingent claims? Whether we can provide for the provision against this claim? Can a company still dissolve?
Okay. So again, this is a very good question. Now a contingent claim presume some income tax proceedings are going on against the company, and the liabilities has not crystallized. So now here, you will have to get the liabilities crystallized, pay off the liabilities, then only, it is possible to close the process. Otherwise, unless until the liabilities are not crystallized, you will not be able to, in a position to close the process. Now, if suppose there are some small liabilities which remains uncrystallized, and if the director gives an indemnity bond, then I think, the liquidator can submit an application to the court stating that the directors have given an indemnity. And if some liability arises out of the contingent liabilities, then the person who was given an indemnity must have sufficient, net worth to give an indemnity, and the court might allow the company to be dissolved.
Okay. So next question, again a practical question. In case the shareholder is receiving an amount in excess the value of share capital,
okay,
on the event of liquidation, whether the excess amount received would be taxable under the income tax?
Absolutely.
Whether,
That is section 222C, the dividend. So suppose your capital contribution was 10 rupees and you receive 20 rupees, then the balance 10 rupees is payable as a dividend distribution tax. So the balance amount over and above the share capital becomes a dividend in your hand. Will be deemed as dividend.
I think Punit
We have
sir's,
lost
yeah, he will join again.
No problem.
Sorry sir, मैं थोड़ा disconnect हो गया था.
No problem.
So इसी का continuous जो part था उन्होंने that he has also asked whether the appointment of liquidator by the board of director without the consent of shareholder would be lawful.
No, actually the board of directors are not appointing the liquidator.
Right.
The shareholders will pass a resolution of appointing the liquidator.
Yes.
So board can only propose. It has to be, approved by the shareholders.
Next, इसी question का अगला part है. After the realization of all the asset and payment of liabilities, whether the liquidator can pay the shareholders or she has to wait for the order of NCLT.
No. Point is that he has to distribute the entire capital. So the liquidation estate has to become zero. All realization has to be paid as per waterfall under section 53. And when there are no assets, no liabilities, then only he can file an application in the NCLT. The NCLT will only pass an order stating that there are now no assets, no liabilities, and the company should be dissolved. The NCLT will not pass two orders. One to make the payment to the shareholders, and second to dissolve the company. There is only one order passed by the NCLT stating that now the company has no assets, no liabilities, so the company may be dissolved.
Okay. So next question is, as per the amendment in the regulation 3, subsection 1, subsection A, the board is requested to provide for the preservation of records of the company pertaining prior to the liquidation period. Once the company is liquidated, who is accountable for the record prior to the liquidation period? Who shall bear the cost of preservation of record? In case there is any query from department, who shall access the record and provide the information?
I think, Puneet, we can continue with the next question. And I'll just take I have to review this provisions, and I think the primary responsibility is with the directors of the company. But we have a provision in the regulation of actually, you'll have to refer regulation 41 of the voluntary liquidation, which talks about the preservation of records. The liquidator shall preserve copies of all records which are required to give a complete account of the. So liquidator is responsible. And I think his period is 8 years.
Okay.
So if you read regulation 41 subclause 3, it says the liquidator shall preserve electronic copy of all records for a minimum period of 8 years and physical copy of records for a minimum period of 3 years. That is the requirement.
Okay. So next question, who shall sign the financial statement for the partial period and for the liquidation period? Further, how can a company file financial statement annual return without holding the AGM? Who shall hold AGM once the LCD has commenced?
Okay. So again, I told you, if you had referred to my presentation, the board of directors in voluntary liquidation is not suspended. And we have to have a board meeting, AGM, everything has to be done. So there is no relaxation so far as the statutory requirements are concerned. And the liquidator will also sign the balance sheet along with the directors in voluntary liquidation.
Okay. Next question. Department like GST and income tax department are sending notice post deletion of companies. Is the liquidator obliged to attend the top these queries? Who shall attend the queries? And in case notice result into high demand, who is responsible to pay?
Actually, Puneet, what is happening is people, I think, are getting confused between liquidation and voluntary liquidation.
Right.
So these queries are actually not relevant for voluntary liquidation because I told you in voluntary liquidation, there cannot be a situation where the company has been liquidated and the liabilities have not been paid. These queries are more relevant for a normal liquidation.
So next, how to deal with the pending litigation? Whether liquidation process can be completed without closure of pending cases? How?
So the point is, normally, in voluntary liquidation, the process should not be initiated unless until we have a complete clarity on the liabilities of the company. Because please understand, we are giving an affidavit, and if the affidavit is wrong, it tantamounts to perjury. So the directors have to be very sure that we have the assets in the company to pay off the liabilities. So if there are pending litigations and you don't have a clarity what litigations are there, what would be the liabilities, you should not initiate the process of voluntary liquidation unless you can have complete clarity on the subject. So the answer is that you should first get a clarity on the pending liabilities, and post complete clarity only, you should start the process. You should not hasten to start the process.
Right. So next question, what is the income tax implication of surplus distribution?
That is, either it's a capital gains or it is a dividend. There's
Right.
no other implication.
Right. So next question, I think ये already covered है, फिर भी मैं पूछ लेता हूँ. Can the liquidator be any chartered accountant, or does the CA have to be registered insolvency professional only?
100%. He has to be an insolvency professional.
Right.
Whether he's a CA or not CA is not important here. Insolvency professional is a must.
Right.
And
Next
must also have an AFA, authorization
Right.
for assignment.
Yes. Next is who appoints liquidator and when?
Achha. The liquidator is appointed by the company. So the board of directors will propose and the company general meeting will confirm. So it's appointed by the company board of directors.
Next question is that, can we accept claim after the due date?
So there is no bar in accepting the claim after the due date, because the point is that if some claims are lying on, like some claims are pending, it has to be paid by the liquidator. So there is no bar in accepting the claim even after the 30th day.
Okay. Next question, filing of MGT-14 by the private limited company stating the resolution for voluntary liquidation of the company has to be filed.
Absolutely, it has to be filed.
Next, in case of income tax demand and GST demand, what will happen? Can we go for the voluntary liquidation?
No. So again, I think this query pertains to the normal liquidation. If there are GST demands, income tax demands, you are in a position to pay the full amount, then only you should go voluntary liquidation. Otherwise, you should go for CIRP.
Yes. Is it mandatory to distribute the proceeds to shareholder in cash? If any immovable or movable asset is proposed to be distributed to shareholder, is it possible under the voluntary liquidation process?
Yes, absolutely. So the point is, liquidator will deposit all proceeds from sale of assets into a bank account of the liquidator. And if suppose some assets are being distributed, it will be distributed at the market value. And if there is money lying into the bank account, that again has to be paid by check only to the shareholders. So nothing happens in cash, all transaction happens in check.
Right. Can board of directors continue to draw remuneration after commencement of voluntary liquidation?
No remuneration can be drawn because the company has ceased business. So remuneration cannot be paid.
Since the litigation can continue during VL, how can the liquidator apply for the dissolution if the litigation continues beyond the statutory timelines?
Okay. So this is a good question. Again, I would reiterate here, you should not start a process if a lot of litigations are pending in the company. Because please understand, 90 days is given for completion of a voluntary liquidation. And maximum is 270 days, where the resolution has to be approved by the creditors. So if you are not in a position to close the process in 90 days or 270 days, you should not initiate the process.
Okay. Next question. Can a company go for voluntary liquidation if it is no debts, but there are overdue tax payment? Again, same question.
Again, same query.
Would the employee of CD under voluntary liquidation get the notice pay as per their appointment letter?
Okay, so the point he wants to say that he would get a notice pay. I doubt, that will not be payable because the company has ceased business, and there would technically be no employees left in the company because the company would have closed all activities.
Right. If there is no asset other than fund in the bank account, will there still be a requirement of valuation report?
No, that will not be required. So the directors can basically, state in the affidavit itself, or can enclose an enclosure stating that since there are no assets in the company, so they have not done any valuation.
Okay. Is it compulsory for the liquidator to evaluate if there are any avoidance transaction in spite of all liabilities being settled?
Yes, absolutely. Because if there are avoidance transactions, he has to examine, he has to file an application, make recoveries, and distribute it to the shareholders.
Okay. Rita ji, I have covered all the queries you have sent. 2 lots has been given. I have asked all the queries. If there is any other queries?
Yeah, there are 3-4 queries. If Vikram sir, is it okay? Otherwise,
Yeah, absolutely. I am fine.
yeah, we are just sending across to you, Puneet ji. In the meanwhile, I have it in front of me in the system, so I can check with Vikram sir. The question is, if the company is undergoing litigation under income tax, can voluntary liquidation be done?
So again, my answer, ma'am, is same answer.
Same.
It is not advisable to start a process under voluntary liquidation if you don't have a clarity what is the liability outstanding in the company. Because you have to complete it in a very short timeline. It is better to get the clarity and then start the process.
Okay. Similarly, they are asking if the company is undergoing litigation for certain performance guarantee, can still voluntary liquidation be done?
So again, the answer is very similar, that whatever liability it is there. Now the point is that this is a little tricky question, I would say, because suppose the performance guarantee pertains to, say, it will become due, say 3 or 4 years after the work has been done. So in that case, what the liquidator will have to ensure is he takes an indemnity bond from the directors stating that if there are performance related liabilities on the company would have gone for liquidation by that time. So the indemnity will say that all the liabilities will fall on the directors and they will make good those liabilities.
Okay. Fine. Sir, the next question is, in voluntary liquidation, the board declares that the assets are adequate to pay off all creditors.
Right.
In such a case, can there be cases where there is shortage, and if there is shortfall, what is the recourse available?
So this was actually covered in my slide, ma'am.
Yeah.
Regulation 14 says there are 2 possibilities where the process has to be terminated. So if suppose you gave an affidavit that you have the sufficient resources to pay off all the debt and you're not in a position to pay, then the process has to be suspended.
Okay. Maybe they all heard it, but still they wanted the clarification. Yes. Then another employee related question. When there is no debt inclusive to employees tax extra, who are the stakeholders? The committee will consist of whom is the question.
Okay. So actually, there is no requirement of a committee here, because the point is that the entire process is being run by the board of directors only, and there is no intervention of the NCLT here also. What the liquidator primarily is supposed to do is, the objective is very clear. The objective is to distribute the capital lying in the books of accounts to the shareholders. That is the objective of voluntary liquidation, and to dissolve the company, because the company has no intent to carry on the business. So normally, even in the case studies, if you see, there is a equity capital, there is a preference capital, there is a bank balance. That is the normal structure of a voluntary liquidation process. And that money goes to the equity shareholders after paying whatever small creditors' dues are there, like auditors' fees, legal fees, liquidators' fees, all those fees have to be paid. And the balance amount is paid to the shareholders, and the application is filed in NCLT for closure of the process.
Okay. Sir, one more question. If the lessor cancels the lease as on the date of filing application for voluntary liquidation, moratorium, will it apply or not?
So again, in my slide, I had said there is no moratorium applicable to voluntary liquidation. We don't want any favors in voluntary liquidation. In voluntary liquidation, we are in a very sound financial position. We are in a position to pay all the liabilities. And normally, we would not be in a position that, we have taken some property on lease because we have already closed all the businesses. So we would have vacated the lease also.
That's
When
right.
there is no business, what is the point of having a lease and lessor?
Yes, sir. Yes, sir. There are two other questions, may not be directly linked to
No problem.
but yeah, it's a general question. Like, if a operational creditor's claim has not been considered, what remedy he has when resolution plan has been approved?
Oh, so actually, ma'am, there is no resolution plan here.
Yeah, that is what I said.
So, that is a CIRP
process.
question. Yeah.
It is not relevant to this subject, but yes, it's a general question. Another thing is with regard to liquidation, sir, may not be voluntary liquidation. There are a lot of questions connected to if income tax assessment is not completed before liquidation of the company, what is the process for completion of liquidation process?
So the assessment will have to be completed. And in that case, liquidation will continue even beyond a period of 12 months. And after expiry of every 12 months, he will have to, get an accounts audited, have a meeting of the contributories. And till such time, assessments are not complete, the process will continue. Process has to be completed. Assessments have to be done. All liabilities have to be paid. And then only he can file for. Because what will happen is the moment he file an application, the normal process is the NCLTs will write and will send a query to the income tax officer seeking if there is any demand outstanding in the company. There is a general process which the NCLTs follow. They will write it to all the statutory bodies stating that they have no dues or no claims. So naturally, he will not get any clearance from those departments.
Okay. So I think maybe the last question, how soon the company under liquidation can distribute the cash to shareholder?
Okay, so the timeline is 30 days, ma'am. After 30 days, the distribution can start by the liquidator.
Okay. There are some general questions also, like give your opinion on cost of liquidation under IBC. Basically, they want to understand what are the things which will be considered.
Cost is the audit fees, which the liquidator has to get an audit done. Second cost is the fees of a lawyer, because he has to engage a lawyer who will draft an application, and file it in the court. There could be multiple hearings in the court after the application is filed, and eventually then the court will pass an order. So there will be a legal cost. There will be the auditor's fee. Then there will be a fee of the liquidator, the liquidator's fee. Then there could be statutory compliances fee, like filing for income tax returns and then filing GST returns, all of those pending statutory liabilities. So these are, filing TDS returns. All these kind of expenses are normally involved. And depending on the size of the company, fee of the liquidator is something again, between the company and the liquidator. There is no regulation which prescribes any minimum or maximum fee.
Okay. One more question is the way extension from NCLT is there, timeline extension. So if liquidation is not completed in time, whether any such extension is required to be taken?
No. Once you file your application in the NCLT, then, the process can continue in the NCLT level, but you don't have to seek any extension because you have done your job, you have filed the application. Now, it's a normal process when the courts will pass an order for dissolution.
Okay. Thank you, sir. You have covered a lot of questions which we have received as of now. Thank you so much for taking us in detail about this voluntary liquidation process. We have got a very good response from the participants for this, and the questions are still coming. Thanks to Puneet ji also for moderating the session and making it as much interactive as possible. And
If there are any queries, ma'am, we can still address, no problem.
yeah, there will be, sir, even after the webinar also. The questions keep coming to us, sir. Maybe we can send also offline.
Maybe if the participants want, you can share my email ID. They can.
Yes, sir. Yes, sir. Yes, sir. We will definitely do that. Because we are saying that this particular topic is drawing lot of
Correct.
attention, from the participants, all chartered accountants, young chartered accountants, and those who are also practicing insolvency. All kinds of questions.
Actually, ma'am, why this topic is relevant is that from the
Yes,
business
sir.
point of view,
Yes, sir.
there are a lot of opportunities in the market to do a voluntary liquidation work.
Good.
Lot of
Yes, sir.
work is available in the market to do a voluntary liquidation, actually.
Yes, sir. Yes, sir.
So from business point of view, it's also important for the professionals
Yes,
to
sir.
understand and at least take up some assignments to gain experience as a liquidator.
Yes, sir. That is true, sir. So I think we may, with your permission, conclude the session, sir. The questions we'll send across, and we can also share the email ID. On behalf of Committee on Insolvency and Bankruptcy Code, thanks to Vikram, sir, for making it, very detailed. You had covered, and lot of questions, even though some of the questions were maybe a specific question to that particular participant, but still you have answered them very patiently. And thanks to Punitji for being a moderator of this session. Thanks indeed to both of you, sir. Thank you so much.
Thank you, sir.
Thank you,
ma'am.
thank you.
Thank you.